Hello, everyone. I'm Joe Furlong, and welcome to this special edition of the AiCR Exchange. Coincidentally, I'm in London. My guest is in charge of all of our due diligence in the UK and Eurozone. Unfortunately, with all the travel back and forth, we couldn't get in the same room. It happens. So it is what it is. Also, I want to get in front of it. We're all kind of traveling. You know, internet's kind of wonky. So forgive us if we go freezing and all this other stuff, but it's going to be great. Today's show, we have John Cooper. He heads up our due diligence efforts in the Eurozone and the UK. Welcome to the show, John.
Thank you, Joe. It's a pleasure to be on the same call as you.
I'm excited to have this conversation today, and I want to start it off right now. Most of our viewers that we have are in the US, and like when I first started coming over to the UK and the Eurozone, it's like, well, what's the difference? So let's take a second. Can you give us a high-level overview, by your point of view? What's the difference between due diligence in the United Kingdom and the Eurozone compared to the US?
So I guess it's really about how loans are originated and serviced in the UK, which causes the biggest difference in the due diligence side of things, and the same in Europe. Unlike the US, the majority of mortgages and loans within the UK will either be funded directly by customer deposits and retained by the banks on balance sheet. Some will be covered bonds, some will be securitized. But it tends to be that the originator of those loans will retain those loans and service those loans. So rather than having a loan file where all of the documentation is 700 pages or 500 pages, in the UK, all of the documents will be retained within the originators or the servicers' systems. So that's the biggest physical difference between the two. And then, of course, in the UK and in the Eurozone, because they're all retained individually by the banks, everyone has their own processes. So that's the next thing
I wanted to ask. Yeah.
So they'll all be different. They'll all be different. They'll all have different requirements, and therefore we have to be slightly more flexible in the way that we will do a job. So it's driven more by the lenders themselves rather than us.
So let's talk about that. Because that's an interesting concept. So in the US, obviously we have resi, commercial, consumer, all that other stuff, but let's just focus. And in the US, even though there's that sort of thing, it's kind of standardized when it's all said and done. We're getting a little bit of lag here, so forgive me. Over in the Eurozone and the UK, it doesn't seem to be that way. I mean, it seems like every lender has their own guidelines, their own specifications. There's no document standardization. Am I right on that? Can you expand on that a little bit?
Yeah, absolutely. So each lender. So where I think what you've touched on there is the regulation side of things. So certainly in the US, where everything goes down the same route. So any qualifying mortgages in the US eventually will end up with one of the three, the Fannie, Freddie, or Ginnie. Whereas in the UK, that's not the case, and therefore the same process does not exist within each particular lender, or each lender will have their own process. They'll have their own policies and procedures, their own criteria, and if it's a forward flow agreement, for instance, the senior lender will be in control of the criteria for the products rather than the lender themselves. So yeah, the process itself is completely different. And then when you go to the Eurozone, for instance, there are similarities with the US as far as the file contents are concerned. So you'll often find that, for instance, in Spain, where we do quite a lot of business, you'll have, as in the US, a big file with all the documentation for a loan. But that's because that loan has been sold from the originator to another loan provider, then to another loan provider and another loan provider. And it could have been sold 4 or 5 times. And any non-performing loans potentially will then be bundled up and sold to another provider, and then there'll be re-performing loans. So there are similarities in that respect, but like I say, in the UK, it is very, very different. And
So
like I said, you have to be a lot more flexible.
yes, so let's just talk about Spain.
Mhm.
Clearly, they don't speak English there. I'm assuming all the documents are in Spanish or whatever the case may be. I mean, how do you handle that? How do you bridge that gap both with a review team and the technology to be able to handle that?
So in Spain and Holland, where we've worked as well, it's very much using trusted contractors that we have known for many years, who work in the country in question. So in Spain, for instance, we're dealing with a company that we've known the individuals that work there and that run it for many years, and they will actually employ local contractors who they've worked with in the past, and they will actually do the translation side of things. Now, you can get by on some work that we carry out with translating it through Google or any other system, but you really do need native speaking people on these projects. Whether they're controlled by a non-native speaker is fine, but you definitely need the people that are actually physically doing the work to be native.
And I would suspect that there are locale customs and norms that vary from location to location, country to country. And someone
Absolutely.
that may be familiar with loans in Italy, but if you're not in there every day to be able to accurately review that deep dive of these loans, you need to have someone that knows what they're doing.
Yeah, you're absolutely right. I mean, it's the same. If I was to turn up in the States now and to try and review a loan, I would be lost. And that's even speaking the same language. So when you build into the fact that the processes, the policies, the procedures, the files, even down to the way they record the charges in different countries, you would think in the EU they would all do the same thing because they've got one bank that covers them all, but they don't. They still have country-specific regulations as well as the blanket European permissions. So yeah, it's a lot more complicated when you're dealing in Europe.
You just said a word there that I've always found amazing and reminded me. When I first started coming over to the UK, I figured, oh, it's so similar, but there's little differences. And sometimes those differences are significant and sometimes they're small. Like you just said, charges right there. I could tell you in the US, most people will have no idea what you just meant by charges. And I'll clarify, it's lien position. So you have first lien or second lien, and you call them charges. It's those little differences that are meaningful. So you need to understand what's going on and how to be able to deploy it. And it's even further than that, to my understanding. If I go into Bank ABC, their guidelines may be completely different than Bank XYZ. So how do you handle this absolute ad hoc variety, not only geographical location, but from bank to bank?
It basically makes the process slightly longer. Every time that we do a project in a new lender or a new client for us, we have to go through all of their policies and procedures. We have to record their criteria. We use Verify, which is our own, obviously, MIAC's own internal software for due diligence purposes, and we can build in a lot of the criteria checks that we need to make for that individual lender into Verify, which then assists us when we're physically doing the hands-on, whether that be remotely or actually on site with these lenders. So that's important. And having experience, the people that we use when we do projects, we don't use people that haven't been in the industry for probably less than 15, 20 years. So you need that experience level as well when you're dealing with different lenders, different criteria, different products, asset classes. It all adds up. So yeah, Verify, using a tool that helps us, and having experienced staff is kind of the biggest plus that we can have.
So in the United States, we mostly do residential, amongst others, but it's bulk of residential. Is it the same for you guys over here?
No, I mean, with residential buy to let, which would be investment properties for you guys, rental properties. There's Sharia mortgages. There's development loans, bridging loans, equity release, which is reverse mortgages or lifetime mortgages. So there's auto loans. We've dealt with agricultural loans, and again, that was in Latvia. We were actually dealing with those. So it just shows that the asset classes that we deal with are as varied as the countries that we have to deal with as well.
That's crazy. Latvia. I can never imagine going to Latvia, but
well, not only were
the
the loans were actually being funded by a Latvian lender, but the actual loans were being underwritten and secured on agricultural properties in Poland, Romania, and I think Bulgaria. So you had different languages on different agreements as well. So again, it gets even more complex when you start building it out like that.
Do you? Yeah, obviously there's securitizations in the Eurozone. In the United States, there's a lot of regulation as far as what's called a TPR, a third-party reviewer. We have to go through this arduous process to become on a list of acceptable, not approved, acceptable TPRs. Tell us about how the review process and due diligence firm interact in the securitization process in the Eurozone. Okay.
So there's no unlike the US, due diligence companies in the UK and Europe are not approved by the rating agencies. So it's usually a very long process of having worked with them in the past, so that they become comfortable with accepting the work that the individual due diligence company is carrying out, which I think makes it harder. I think if there was a process like they have in the US, it would be much easier to deal with. And of course, you could then the rating agencies could then spread the work amongst due diligence firms rather than using the same one each time, which does tend to happen. But yeah, it's very much an experience-driven approval process, and nothing's official. That's part of the problem.
A huge difference between the continents for sure. So let's talk about the marketplace in the UK. When I come over here, I hear you guys talking about different things like auto loans are going through this regulatory issue with commissions, or that was before it was commissions on, I don't know, residential thing. What's the hot button issue over here that's really getting the market going like, wow, we need to pay attention to this?
Well, the car commission issues are still there. We're still waiting on the Financial Conduct Authority to give the final ruling on that and how it's going to work. There's a lot of companies that have had to put a huge amount of money aside for potential compensation payments. But I think the biggest hot topic at the moment in the UK is the MFS, a lender that has gone into administration recently, whereby they were double dipping on the loans. So the loans were being offered to more than one party, and obviously each party that was potentially investing within those loans didn't know that they were being given to other parties as well. So that's the talk of the town at the moment. Been to a few events over the last few weeks. Everybody's talking about it. Everyone's looking for solutions to avoid it happening again. I think everyone is thinking about how we can do it, how we can potentially help lenders control this process, so it doesn't happen again. So that's evolving at a pace at the moment. It's in the news. I think it's not only in the news in the UK, but I think in the US as well. So that's the real hot topic at the moment, is how that can be prevented, and it's some of the big banks involved as well. I mean, some of the proper high street lenders are potentially up for hundreds of millions of pounds worth of losses just from one lender.
Well, clearly in the US, we have this similar issue. It may not be as, spotlight on that you guys are experiencing right now, but it happens from time to time. People double pledge or double sell things. I would say it's a problem in the United States, but I don't know if it's pervasive, because there's a lot of regulatory scrutiny and standardization that we can get around that. But it's something that it really, I think there's worldwide solution that we need to get, because you're not talking nickels and dimes here. You're talking hundreds of millions, if not billions of dollars that could possibly be lost.
Absolutely. I don't think it's a particularly prevalent issue in the UK. We don't know. We could have said the same about car commissions when that was first mooted. I can't imagine that it's as big a problem as the car commission compensation scheme.
What is the car commission? Let's take a second. What exactly is that?
So, in a nutshell, when the lenders were providing finance to the everyday person to go into a car dealership and buy a car, within the agreements, it would have stated to the customers that potentially there would be some commission paid to the dealers for introducing them to the lender. Now, the courts decided that the wording wasn't clear enough, and potentially customers weren't made aware that the rates within the loans could have been affected by the commissions that were paid to the introducers. And because of that ruling, and like I say, the final decision hasn't been made by the Financial Conduct Authority yet, but I believe it's something like £600 million worth of money has been put aside there or thereabouts for the compensation to be paid back to clients, where the rates on the loans were potentially affected by the commission payments, but customers not being aware of it.
So that's extremely interesting. I can state, because I started my career in indirect automobile lending in the United States, where the borrower would go to the dealer and the dealer would arrange financing. Part of the income stream for the dealer is upselling the interest rate from the buy rate that the lender gives to what they sell the dealer. I mean, that is commonplace in America. And although there may be some disclosures, it's more of like just an agreement between the lender and the dealer. It's not really disclosed to the borrower at all. And I think a lot of dealers, the dealers rely on that, because the spreads and the margins on selling a car have been shrunk. That is significant, that the UK is putting the spotlight on that.
In the UK, whether it's a car loan or credit cards, an overdraft, a short-term loan, a mortgage, any type of lending is very customer focused. The lenders have to be squeaky clean. They have to be extremely transparent to customers on any lending. If there's any third parties involved, what they're going to get. Now with mortgages, the majority of mortgages in the UK, I believe, come through the broker networks. So brokers, will always be getting a commission or a procuration fee from lenders. But that's been going on for 25, 30 years. And M-Day, which I believe was back in the beginning of the 2000s, which is when it was standardized what had to be quoted within regulated loans. We thought things would be quite quiet after that, because there it is. There's a document, customers can see it. We all know that customers don't read all of their agreements.
Yes.
If you're a customer going in to buy a car, you want to buy that car, you want to pay X amount per month. You probably don't care whether the dealer's getting a commission or not. You just want to drive that car away. but it still comes down to treating the customer fairly, making sure everything's transparent, and this is where things may have failed somewhat.
Let's talk about treating the customers fairly. This one, I've had a disconnect in my brain for more than 15 years, and let me explain what I mean. So in America, the vast majority of residential loans are 30-year fixed rate mortgages, meaning the interest rate is fixed for 30 years. There's complete certainty to the borrower what that interest rate is going to be. Now, over the last year or two, with the interest rates being higher than they have been historically over the last 10, 15 years, some more people are going with a 5-year fix and it floats thereafter, or 2-year or 3-year, or it's called a hybrid arm. But still, even with that, a vast majority of them are fixed. I've heard many stories in the UK in particular where lenders have tried to do the 30-year fix and the market is not responsive to it. They just don't want to do it. Where most of them, a 2-year fixed and then adjust like that. Help me understand why the borrowers don't want a 30-year fix.
I'm not sure that it's the borrowers not wanting a 30-year fix. I think it's down to, again, as I was saying, most mortgages in the UK are broker introduced, and it's always been either a variable mortgage, a capped rate mortgage, or a 3 or a 5-year fix, maybe. The idea of a broker selling a 20, 30-year fixed rate to a customer, I think, is just completely alien to this marketplace. And I don't know whether I'm going to be right here or not, but to me, it would suggest that if I'm a mortgage broker and I'm broking a deal for you, Joe, I want you coming back to me in 3 years or 5 years so I can push you onto a new lender to refinance that deal, and then I get paid again. If I give you a 20 or 30-year fix, you're not going to come back to me for 20 or 30 years.
So if the UK is so
it's potentially one of the reasons.
Yeah, I understand. But if the UK regulatory agencies are so borrower focused, how could they get away with that? I mean, it just doesn't seem, there's like a disconnect somewhere. I'm missing it.
Well, I mean, I think everyone's potentially missing it. Look, I don't know if that's the main driving force behind it. It could just be that the market has never been into long fixes, and it's one of those things that people need to get used to. I know that there was a company that came into the marketplace in the UK a couple of years ago with I think a 30-year fix, 25, 30-year fix, one of them, but it's just never taken off. So it's been tried, and for whatever reason, it's just not being taken up. Now, whether that is broker-led or whether it's consumer-led, I don't know.
So let's kind of shift topics a little bit. You mentioned this early on in our conversation, Sharia law loans. I'm vaguely familiar with Sharia law, where I guess they can't pay interest or something to that effect. I could tell you in the US, I haven't heard a time where there's a Sharia law loan review, but I've heard it many, many times throughout the Eurozone. Can you talk about it at a high level? What does that look like? How's it different? What's the deal?
It's still a very small market. I believe in the UK, it's something around half £500 million a year. So it's tiny. It's very, very small. And like you say, it's a non-interest bearing proposition. So it's almost a shared ownership between the bank and the customer, where the bank will buy the property and the customer buys shares within the property until they own all the shares. Now, considering the growing market, the growing consumer base for Sharia loans, it can only get bigger, but it's just at what speed it gets bigger. I was looking at this a couple of days ago, and I was looking at the European model as well. And again, very, very small compared to your standard residentials, and even the buy-to-let market, and even the equity release market. It's much smaller than that. And yet, the people that would be interested in it, the population's growing massively. So it's really trying to work out why it hasn't grown so large, or why it's not growing in the same way as the population's growing. Potentially, there's a lot of family lending that goes on in that community, so that will slow down any institutional lending. There is some in the UK, and I think it is growing in the UK, but it's just not growing at a rate that you would expect it to grow.
Wow, it's crazy. You know, every time I come over to London, which I am very, very fortunate to come over here 4, 5, 6 times a year, meet with business participants in the UK and the Eurozone market, and I always am amazed on how the differences that come up all the time. Like, I learned a new English phrase today, and I even had to ask you. I said, what the heck is fly tipping? I went to John. I was watching a BBC report, and they're talking about stinking fly tipping. I'm like, what the heck? Because of course they didn't explain it. They just said it's a fly tipping. So I went to John and what is fly tipping? So can you share with the audience what the heck fly tipping is?
Fly tipping is dumping rubbish illegally. So it's you're tipping stuff out and then you're flying away. So fly tipping. Like so many funny British phrases, it's probably been around for longer than we've been around. Yeah, we do come up with some funny ones.
But as I always say, the Americans know how to speak English properly, unlike the Brits. We have this argument back and forth all the time on who speaks English properly, and I win. I win every time, John. Every time.
Well, we like to make you think you've won. And even when we tell you you've won, we're still sitting there with our fingers crossed because we know that you haven't.
Yes, you're just upset since 1776 when we, kicked your butt, during the revolution.
We were only upset because of the wasted tea. That was the only reason we were upset.
Well, John, I want to thank you for your time today and all the information you got. And I hope the audience found some information that is useful. I know every time I come over here, it's always an enjoyable thing. I want to ask everyone, please follow the AiCR, myself, John Cooper on LinkedIn. We can easily be found. I have a little spot in the bottom there. You can search AiCR or Joe Furlong, or you can actually search John Cooper. I really appreciate everyone's time today. Enjoyed the conversation. Until next time, see you next.
Cheers, John.